All right, gang, here we are. We're going to start and make sure that the sound is still good. And this would be a good time for me to say test, 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 and make sure everything is firing on all cylinders here. So let's review. I got good. George Valley, good to see you. John Zaz, the Zoster, thank you very much. And thank everyone for being here this afternoon. And now let me. Very nice, perfect. Folks, this is going to be kind of a short and sweet presentation. Today, what I wanted to, what I thought would be nice, because I've put out in the general public for, gee whiz, now I think about a month or more, that my prognostication was I was looking for the stock market to get up to, in the S&Ps, almost a 5% year-to-date gain by, first I said in late April, I said by the May option expiration, and then I said by the end of May. Well, the end of May is pretty much here, and we didn't get to that 5% year-to-date gain. And I noticed that I've got a lot of people asking me, and I've seen, I think with today's move down, I'm sure tomorrow my email box will be full of, see, we told you the crash is coming, and I'm sure I'm going to get those emails. So the question begs, and with last week, as you've probably been hearing in the transportation sector weighing in on the market, and I would have to say that based on our information and the way I look at markets, is that I try to take a dissection of what's running the game, so to speak. Where's the strength? What's the leadership coming from the market? So, and then how do I apply that and manifest, at least where do I put my money to work, for gosh sakes? So if you've been kind of tired about hearing about when the crash is coming, and you are kind of tired about some options getting into vertical spreads, which seem that this market, I don't know if you guys, if I can take a little poll here, but what we seem to do in equities is anywhere between a 3 to 5% move in a stock, and then it seems to stall and pull back. And we've just been chipping away at some of the markets, and we've gone from leadership, which was the biotechs, then we had the airline stocks, and now they're making a big deal about airline stocks getting crushed. And if you take a look back over the last year, you'd see that, well, they probably due for some profit taking, right? And then you start looking at other names in the financial area, and we've started to see banks and regional banks start to pick up, and that's kind of been something that we focused in on, as well as certain technology names like Broadcom and Xilinx, which we've picked up and done quite well. Last week, many of you, I'm not sure if you get on my tweets, but we actually seem to send out some timely tweets, and one we put out about Alibaba. And Alibaba, I thought would hit, and I said in the next 10 days, it happened in the next 10 hours, between 92.5 and 94 area was the upside target in Alibaba when it was trading in the low 80, in the upper 88 area, excuse me. And so when you take that kind of a move, using directional option strategies the right way is very lucrative. So I think today what I wanted to really accomplish is to, number one, go over for those who are perplexed at the market and what we're in for the next few weeks, or at least into the month of June, because that's something that we're coming up with, is another new month. And with everyone looking at economic data and the Federal Reserve, whether they're going to raise rates, what it's going to do, when they're going to raise rates, blah, 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 and really how healthy is the economy, what we need to take a look at is really how healthy is the stock market. So if you're trading equities, and if you're trading equity options, then you're in the right place today, because we've got a lot to cover. I plan to cover this in hopefully the next, I'm going to say 55 minutes. I wanted to get done in an hour and let you guys get on with your day. We'll have this recorded. So, and something that's unusual for me is to be short and simple and sweet. So many of you are familiar with this book, Mastering the Stock Market. This book now seems to be like I just wrote it a week ago, and it came out December 2012. In that book, it talked a lot about some of the techniques that we've put in and programmed in our professional packages, which many of you have, the Lifetime with Genesis as well as TradeStation. My philosophy in life is you got to kind of let the winners run. You got to cut the losers. You got to be disciplined. You got to go with the flow. I still feel that seasonal trends have been very effective this year in the market, and technical analysis is an understatement, helps. I always believe that technical analysis supersedes seasonal analysis. You just don't go in blindly without technical analysis, and technical analysis means price and other indicators that are not price-based. So, in other words, we don't look at, like, say, MACD and stochastics and RSI and price-based indicators. We want to look at condition indicators like volume, and you want to look at, when it applicable, participation or breadth analysis in equities. And that's what this book really delved into, was a lot of that for equity traders. You know, I think our trading demands and what you're asking for the market, you need to kind of sit down and say, well, what is it that you're looking for? If you like day trading, it's short-term in nature. It's time intensive. You got to be there when the market moves. You got to kind of have a game plan, but you got to be able to, when the indicators flip, you got to be in front of the screen in order to manage that trade. You can do end of day trading and kind of have your game plan of where you want to set entries and what your risk is. That's more like swing trade or end of day overnight trading. Stock trading, though, I think what's really happened in this day and age is that everyone's been trading on less capital and not really going with stocks. And if you think about it, most of the stocks in the S&P 500 are pretty much around $80 to $100 on average. And so that excludes, and it is very capital intensive unless you're trading on margin, but still that's capital intensive. It's less leverage, that's a factual statement, but it's less time intensive. I don't have to stare at the screen all the time. Options, though. Options are leveraged. Now, many of you are aware that I first started trading options, and I started to trade options more directional in nature back in 1984 when they were introduced on bonds. I am more of a directional trader. I always have been. I'm not sure we have so many choices in markets between commodities and sectors, and that's where we're not confusing. We just jump for where the market action is. And I believe I can train, and I have trained people to identify where the money flows are going, what segments of the markets are doing. So we have a lot of choices, and I'll share that with you in just a minute. But options, if traded correctly, especially on a directional standpoint, it's a little different of a beast. Many people get a little bit direction, like they feel the market can't go any lower, so I'll buy a vertical spread. And then they're right, but the market pops real quick. And what happens? The vertical spread, that what we call a debit spread, because it's something you pay for, it's debited from your account. Many people are familiar with debit spreads, and I'm sure if I polled the audience right now, people would say, yeah, I'm fed up with those. For the most part, we've seen where the markets move and you get these 3 to 5% stock pops or trade pops, and then all of a sudden the market comes back. I mean, just the other day, Hewlett-Packard Friday was another great example of where the market pops, and if you're in a vertical spread, you can't make money on it, because then look what happened today. The market came right back and some. But if you are in maybe other types of strategies, an outright call, or maybe ratio back spreads, sell one and then buy two further out of the money, and there's specific rules, you're able to trade around the position. And that's something I think is what we need to get that message out, because there really has been some very strong directional trades in a short-term basis in this market, as I feel will probably continue as we get into July. I still think that the markets, even with today's minor bounce and correction, that we still have leadership in the market in the sense of the financials. I believe that the energy sector is still going to do well going into the summer months. And when I talk about the energy sector, folks, I'm talking about stocks in the XOP and the OIH. And I'll get into that in just a few minutes. But I think when you do options, because they're leveraged, especially directional strategies. Many of you may disagree or may not disagree, but one thing that I found when I get a setup and a trigger, keyword trigger, and I know I don't have to teach anyone probably for the most of why or what the high close and low close doji is. You can find that on our website, and that's that a really bullish pattern which we've seen an enormous amount of times in a lot of stocks. In fact, it's so powerful, folks, you know, that we've created in TradeStation as well as other and Trade Navigator, the daily high close doji, which today we didn't get any. We got ABAV, we got one here, ABAV daily high close doji, which doesn't meet the complete criteria, and the other was Comcast. Now this is live right after the market closed. Daily low close dojis, oh my goodness. We got in approximately 89 stocks that generated daily low close dojis. Now, funny thing about Time Warner, TWX, Time Warner generated a daily low close doji, but here's the problem I have. It's a low close doji in a sideways market. And I just brought that up to our your attention because, you know, they seem to be making a big deal today in the buyout, which that's not what I want to get into. But more importantly, when I take a look at the amount of stocks that generate a low close doji, this isn't a stock. This is actually the ETF, the power shares, the Qs, the NASDAQ 100, which did today generate a daily low close doji. So we have some implications with that low close doji, but it has to come with a couple areas of interest that we want to look at. First off, is it been in an uptrend? Yes. Can I expect the market to maybe have a little bit of follow-through weakness tomorrow? Yes. Is the market in a longer-term sharp uptrend, like this was a longer-term sharp uptrend, then we got a low close doji at 1, 2, 3, 4 days down, and then it had market just started to gyrate in this kind of trading range. And for me, there's some good indications that this rally that we saw here was on lighter than normal volume, but today's decline was also on lighter volume. So I would have to say that for me personally, I think that the market still has some upside, but we're going to see maybe another down day or two, and then we'll watch for the market to see if it wants to grind back higher and test that high one more time. What would really catch my eye, by the way, folks, is not a daily low close doji, but yet a weekly low close doji in especially the stock sector and looking at these stock indices. So the funny thing is that the market gave us a weekly low close doji back in March, and we saw 1, 2, 3, 4, almost 4.5 weeks of grinding slowly sideways market. So this is now the first business day of a 4-day week, right? And we're coming close to the end of the month. And the funny thing is that we did see on a weekly chart, and that's what I like to look at. The daily gives me a heads up, and then I look at the weekly. And so based on the market, if tomorrow we kind of chop around, we could negate that low close doji on the Qs, by the way. We could negate that, and what that means is maybe we open a little bit lower and then we reverse right back up again. And so we just go into a choppy type of range where we don't actually go down as much, we actually just chop back and forth. I think there's still a shot that we're going to see a retest of this high one more time, but I'm not stupid and I'm not blind. I'm a technician, I'm a trader, and to be honest with you, I start getting worried of about a major correction coming in the market when we start breaking that white line in the Qs, which is 106.50. When I say break, I mean a weekly close below 106.50, and to me that's until we get a weekly sell signal or a close below that 106.50, which is that white line, that's when I start to flip the tables that we got significant correction coming. But I don't think that's going to happen for a few more weeks, and I'll share with you why. First off and foremost, I think what's important for us is to, we got to cut through this analysis maze. We got to come up with trading ideas. You got to have your strategy, and then you got to have execution. Many of you that were at our seminar in Las Vegas a week ago, we were looking at gold peaking out as it was trading near the 1226 level, and we tried to put on a credit call spread in GLD. We weren't asking for a lot. In fact, we needed gold to trade there or maybe a couple bucks higher, which it actually did, and we still couldn't get filled on a credit call spread, which right there was probably the tip-off. When they won't get you into the trade, it's probably a winner. But execution is the key to that, and I know we have a handful of people in the room tonight that were there at that seminar, and we worked those orders, and we worked them all day. And of course, one of the other aspects of trading is not just trade management. You got to manage that trade when you're in it, but position sizing is important. A lot of people, they do options, and they sense that there is some trickiness, and there is some nuances to trading directionally with options. There's a couple things that we like to see. I'm going to share this one with you. And we'll go over here, and I want to look at the bond market. And if I could change over here to the bond market, here we go. So many of you might be familiar with this little pattern here. I wrote about it. It's inverted though. We went from a strong trend, and I've got it outlined here. We went from a strong channel trend, and we actually, I think, tweeted out, hey guys, this might be a good time to put on credit put spreads, non-directional, because I'm looking for the market not to maybe advance and make a new high. I'm looking for the market to just stay in a range until we take out this particular candle's high, or this, actually on TradeStation it's a little bit higher than that, the gray line. But I'm looking for the market to maybe just drift and grind sideways. And that's actually what we had. In other words, the market goes from conditions, from trend to consolidation. Now, what does that got to do with an option trader? Everything. Because if we get a strong directional signal, then we can go directional. If we have an idea that the market has been in a trend and it might go into a consolidation phase, then we can choose a better strategy. Another great example of that is Green Mountain Coffee Roasters. Green Mountain Coffee Roasters, I don't know if you've seen this stock lately, GMCR, let's get over here, Green Mountain Coffee Roasters. I mean, it looks pretty, what's the polite word I could say, ugly. But if you take a look at this, notice that we have a PPS sell signal, and notice that in these time frames, these are monthly pivots, red is below the prior red. It's giving us a bearish observation up until the last couple days. Now, one of the strategies that we just put on was a credit put spread in Green Mountain Coffee Roasters, because I'm not looking for a spike right back up. I'm looking for the market to just kind of pause, float back and forth, for two reasons. Number one, what you don't see on the chart is a longer term, and maybe I can get this package here together for us. Sorry to flip around here, but this is kind of important. So Green Mountain Coffee Roasters, ironically, is trading at a quarterly. This is not an end of month. This is a quarterly pivot support. What's funny is that that quarterly pivot support, which it ends at the end of June, the quarterly pivot support targeted at the, as you can see, at the end of the first quarter. For the second quarter, that would be support. Now, this is a monthly chart. Now, why would I be directional and say the market's in such a strong downtrend? Why would I buy a call thinking this thing's going to go up and make a lot of money? I wouldn't. Not unless I got a very strong, high probability trade set up like maybe that, which we'll go over in a minute. That actually happens to be the high closed doji pattern. Now, what it is that when we see where the longer term moving averages are way up there and the prices way down here at support, I'm thinking one of two things are going to happen. Maybe we go up a little bit maybe we just trade sideways a little bit, just buy some time for the moving averages to kind of catch up to the price action. But we have what we call a huge gap between the moving averages and the price as we rest against this longer term quarterly support. So we're looking at a market that has also gone down, by the way, significantly over the last let's count them together, 1, 2, 3, 4, 5, 6, 7 months. And I mean, that's a pretty significant move from 158 and change down to 90 bucks, more or less. I mean, that's a pretty significant move. Now, the funny thing is that the market has moved down pretty heavily, and the volume indicators say that move it actually went down on some pretty light volume. So the main accumulation was in this leg up here. As you can see, this blue line has this huge move advancing, and then we kind of moved up, and then we kind of moved up again on lighter volume. And then so whatever, the market's now back to equilibrium, both in volume and in price. And that's pretty impressive. So I would have to say we're just buying time, waiting for the market. Now, if I can teach you that, which I think I can, and I know I can, and I know you are teachable, this is a time where we can say, listen, I'm not really ultimately bullish on Green Mountain Coffee Roaster, but I think I'm neutral, and one of the better strategies there would be a credit put spread, and that's what I think option traders need to address, is how do we get the right trade ideas? And that's why I have this slide, trading ideas. Where do you get that trade idea from? If I have a trade idea that the market's probably not going to completely slam much further, but it's going to maybe grind, then I want to be kind of directional. And then I got to come up with the right strategy, and then I got to get filled on the darn thing. And that's the problem. A lot of times, if you don't have liquid markets, we could do all this work we want, and we're not gonna get filled, like what happened to us with GLD. And I know there's a bunch of people tonight that were there that said, yeah, we missed that one. But that's all right. And then again, trade management. What does trade management mean? Once we get filled and we're in the trade, then we got to follow up with it. And position sizing is everything. I always teach this. Trading, it's like eating a potato chips. No one ever just has one, right? Day trading, no one ever just does one. You do 3, 5, 10, you get crazy. And options, sometimes people are the same way. So you have to define your position size by the risk, because as good as things can be and the greatest the system is and the triggers and the setup, guess what? They don't work each and every time. So we need to be aware of that. All right, I took the liberty of creating this chart for you because I didn't want to, I wanted to keep it just streamlined for you tonight. What you're looking at, and something that I wrote about back in 2004, was the 11-week cycle. And this is that 11-week cycle. And it has actually been, if you go back, the first article I wrote on this was Combining Cycles and Pivot Points to Predict Market Moves. It was in the Futures magazine in December of 2002. That's a long time ago, almost 13 years ago, guys and girls. This article talked about the summation and, of course, the interrelationship of cycles and when markets come near pivot, support, and resistance targets. Well, the funny thing is that many people did not realize this, but I'll let this out to you guys. But it actually, 11 weeks interacts with the Fibonacci series numbers. Now, many of you would say, nope, if you take 1 and 1, add it together, you get 2, 2 and 1, you get 3, 3 and 2, you get 5, right? 5 and 8, you get 13. There is no 11. But actually, 11 weeks, if you add up how many business days are in a week, you'll come up with the number 55. And if you keep adding numbers together, you would find out that 55 is a Fibonacci series number. So I don't know what it is. Maybe it's got something to do with the 50-day moving average. But again, not all cycles work. And you have to match what I call the essence of the market in both volume. And when you look at the S&Ps, another really neat thing about the market is looking at breadth analysis. Now, there's a huge study of breadth analysis done by a lot of people in that book. Mastering the Stock Market went into it. Without getting into too much detail, you can kind of see this is the S&P since October of 2013, and we've seen strong advances, we've seen good volume, we've seen accumulation of the breadth. This again is a weekly chart. When we land on an 11-week cycle, not all 11 weeks do you see major downside action, but when you get light volume rallies, you might get 1, 2, 3, 4, 5, 6 weeks of declines. Then the next 11-week cycle, from peak to trough, yep, it pulled in a little bit, and then the next one, 11-week cycle, from peak to trough, and the next one came in a week late, but still, nonetheless, this is exactly 11 weeks, and guess what? You had a little bit of downside in the advanced decline, you had a lot of decline coming in volume, and you had a big kahuna type break, and that was last fall. And then all of a sudden, you got another one that lasted in a nice little downside. Same type of situation. Advanced decline broke through a moving average, and the volume started to break down. Then all of a sudden, you got this one where you got it, the last 11 week was back in April, and that's where a lot of people were thinking the stock market was going to crash and blah, blah, blah. But notice that the advanced decline was actually moving up, and the volume was moving sideways. So the weekly advanced decline, and this is current as of like Friday. Didn't include today, but it's as of Friday. Actually, this included, I took this mid-session. This includes when the market was trading about 9 handles ago. All right, you can see the price, 2096.5. This is from this afternoon, excuse me. But needless to say, the advanced decline isn't breaking down, and the volume is actually pulling up. So my 11-week cycle, the next time event is in July. So I think the fact that Person's Pivots is targeting a higher red for already, if let's pretend today was the last day of the month, which it's not, but let's pretend today's the last day of the month. Already, friends, the market's targeting the month of June to have a higher green and a higher red. It's already, if we, with the assumption, now keep this in mind, with the assumption that the low is in for the month and the high is in for the month, and the assumption that we close somewhere near 2096.50, that's the assumption, then the Person's Pivot indicator is still giving us a technical bullish outlook. So I can't get bearish right now. The fact is we don't have a complete destruction in the on-balance volume, and I don't have downside in the advanced decline. So what that tells me is that in the next few weeks, as we get into June, towards the end of the quarter, as we get into the end of the quarter, and if we are not making price testing that high, and we get near that 11-week cycle, you bet your bottom dollar I will be monitoring these indicators, and therefore I will be getting more directional and looking for maybe a nice little move, which we really haven't seen one in 4 11-week cycles. And that's the other thing, which is a harmonic type of event that you look for alternating cycles to occur. Now this might be a little bit advanced for people, but I can say that the stars would be lining up, and my call is that we still have upside in the stock market until we get maybe into midsummer. Now, what do we do between now and then? What I wanted to point out to you is how we utilize some of our indicators together. One thing is with the S&P 500, we got to look at what really weighs in on that index. What does weigh on that index? Is it biotech? No. Financials? Yeah, they have strong weight to this sector. Social media? No, not so much. But we definitely can take a look at individual stocks and individual sectors of the market. And I think like we just did the other day, this is Alibaba, where we had a nice little, in fact, we tweeted that out. You can go to our homepage at the Person's Planet, and you will find the tweets right there. One of the things that we looked at was a beautiful setup. The market, this is after earnings, market kind of pulled up. We had a little high close doji, and all of a sudden we started to see good volume accumulation. And that's why we said, hey guys, guess what? This stock is probably going to see between 92 possibly 92.5 up to the 95 area, and it had an incredible blast off. I didn't think it would happen in the next, day and a half, but it did. Now, here's the thing for an option directional trader. If you have an idea that a stock's going to blast off, and if you think about it, a 5% move on a stock, 3 to 5% move on a stock, would you want, if you think the market might blast off and you're only taking that directional move, why would you get into a vertical spread that locks you in and you have to wait until expiration to get paid? It doesn't make sense. It's kind of like looking at, what did we see as well? This stock, Hewlett-Packard. I mean, a beautiful blast off. I mean, no offense, but from like a move that gives you almost 6%, and if you're in a vertical spread, all of a sudden, guess what? You're the next day you're toast. You couldn't make any money, barely have a chance to make money on a vertical spread. Here's Hewlett-Packard in a weekly buy mode. It had some nice upside going, seasonality, had a lot of things going for it, but it just went up and then failed. The funny thing is, on an intraday basis with Hewlett-Packard, I mean, here's a nice little blast off move. It gave a high close doji. The market has this, I mean, even from an intraday basis to the next day basis, I mean, you're talking almost 5%. A 5% move. So for option traders, what I'd like to teach you is, wouldn't you like, and I know everyone here, if you trade equities, you know a stock that moves 5%. You're like going, yeah, I'd love to see a 5% move in a stock tomorrow, John. I'm pretty sure if I was directional and I had the right option, I would make money on that trade. And that's the key. I think what we've been seeing in the market is these little short blasts and bursts of 3 to 5%. And I think as we continue to see the stock market for the next few weeks grind, we're going to be scanning for opportunities for more of those moves. By the way, I'm going to go over some stuff with you that was just, silly stuff that we've done, like Xilinx, which gave nice little buy signals. The high close doji pops up to pivot resistance, the person's pivots. You guys will notice this, just to reinforce this, something we did in our seminar, and I thought it would be important for those that have been around and have seen this before, maybe to reinforce that it is working in this environment. The trend of price is up, there's good volume accumulation, and person's pivot says, hey guys, we're bouncing off the pivot support, you got a buy signal, you ought to see some high close doji, you ought to see some upside, more upside till you get to pivot resistance. Great stuff there. Broadcom, this is another one, and these are all trades that, by the way, we've actually covered in our trading room too. So Broadcom, high close doji, notice the red line is above the prior time period's red line, and the green is above the prior time frame's green. Notice that the volume accumulation is trending up. So if you say, well, listen, I've got a nice trigger on a high close doji, and the key is, I mean, if you add up the numbers, from about 45 up to about 48, it's a $3 move. I mean, quite frankly, it's a little bit more than a 5% move. Not going to make you retire, but boy, it's that sweet spot that we're seeing. So those particular trades, by the way, were actually seasonal in nature, by the way. And it wasn't that we were just stock picking and cherry picking. Those are actual trades that we've done in our trading room. And I know there's people here in our room right now, because they were already logged in, that know this. So I'm not giving you any fly-by-night for the visitors there. These are things that I think are very important. And one of the secrets or the techniques is understanding, if you're looking for a move on a daily chart to happen within a prescribed period of time, like if I think that I should see a move within the next 2 days and maybe give it another 6 or 8 days out, why would you buy a 90-day option? You'd probably buy something with maybe 30 days in. And if you wanted to even get maybe a little bit more net, you'd go maybe 40, 45 days out. And then you could look for an expected rate of return. And I think that's the key for directional traders. They just don't have the skill set for understanding the combination of looking for specific buy signals. The funny thing is that you guys, we've got, in fact, this is some of the stuff that we've done this year. I mean, everything from Mondelez to JCPenney's to Intel, the IBB, Green Mountain Coffee Roasters, Hewlett Packard, all the way up to Alibaba, the AXP, the list goes on and on and on. What I wanted to show you, though, was this scan feature right here, okay? Now, for some of you who have Thinkorswim, by the way, today, we generated on PPS sell signals, and I only have selected 200. I'm going to go up to maybe 1,000 real quick because I selected all stocks. This will take a second, but this is pretty cool stuff. We only have 241 names that generated a sell signal. My criteria is, number one, stocks over 100 million in cap with 800,000 minimum volume. And then I can find out exactly what the, let me go through. And just to run this one more time, there I did it alphabetical now. I mean, in sell signal mode, you could see exactly what transpired and who's generated what, and then more importantly, we can find out what industry they're in, and you can go on down the list. I mean, it's kind of easy to do. I want to find out if the market's truly bullish. Just go over here to looking at, let's see here, license studies, and that PPS buy, and that many people are confused by that. It means person's pivot study. It's not person's pivot points. It's the arrows. It's the indicator that generates buy and sell signals that paints it on the chart for you. That's what's magical about this indicator, is I can run a scan, and the power with using Thinkorswim, for those who do not have Thinkorswim, it's a very neat little tool that allows me to find out, well, how many stocks today generated a buy signal. As you can see, it was a pretty negative day. And today only with the criteria of the volume and the market cap, and that kind of gets rid of all the, except for this company here. But for the most part, you could see that we didn't really generate a whole lot of buy signals today in the stocks, but we generated a whole lot of sell signals. So what does that mean? Probably means we're going to still have maybe some selling pressure tomorrow, but I would be looking to see if that sell pressure dries up and see if that sell pressure is on light volume. And based on where we're at, I would be looking at this as, to be honest with you, more of a buying opportunity in the market. And I'd be running some scans. So the first and foremost thing is I'm still running scans in select sectors. The financials, I'm still running scans in what I think is still going to be a viable market in energy, believe it or not. And I mean, how many of you guys remember the energy craves of January when everyone said it was going to 10 bucks and it shot up to 60, right? And now it's down a couple bucks, $1.30 today, and everyone says it's going to go to zero again. I think from a seasonal perspective, it still stays strong, and I don't think that maybe in late August, early September, after hurricane season threat is done, that we will see maybe another re-challenge of the downside. But that doesn't mean that oil producers, oil providers, service providers won't continue to do well. I think they will, and I think we can scan for that and follow to see if there's some buying opportunities. So with that said, seasonal analysis helps us to focus on what markets they've done in the past, and it helps us to focus in and run scans. So like on Thinkorswim real quick, let me go back to TOS real quick. So I can just simply go to industry and go to energy and select all energy. And, I'm not going to come up with anything except for MDR, equipment and services. It's a $5 stock. And if I ran this on a weekly basis, and I hit scan, in fact, I'm going to get rid of all the filters. I'm just going to run scan. And you'll notice nothing has populated. One more time. Here we go. All right. So I have a 6-cent stock, a $27 stock. I mean, I've got all this penny stuff in there, so I need to run a filter. But needless to say, if I would go energy, and then I go back and use my filters, and I just add a stock filter, and I want to go to volume, for example, and I go to volume, and I want to go, well, give me something that has 500,000 at least. Anyway, you know, this is how you go about running for scans. Well, I'm not going to do a weekly scan. I'm going to run, let's find out, did anything in the energy generate a 1-hour buy signal? Hey, guess what? On a small short-term basis today, look at some of the names that popped up on a 1-hour buy signal. Marathon Oil, okay? You had Occidental Petroleum. So that's kind of interesting. I have a couple names that are not small cap stocks that generated. So tomorrow, I'll be interested to find out if maybe a couple more generated some intraday or and just find out. Without a doubt, I can find out what those names are doing. So if I go over to my charts and I wanted to look at, say, OXY, I'd say, wow, look at this chart here. Well, that's a damn interesting chart. You know, the way the stock market looks and the way crude oil looks, Occidental kind of looks like, from this perspective, the only thing missing right now is a PPS buy signal. It's been in a sell signal and the market's gone down, but it hasn't gone down anywhere. So I'm going to go over here and I'm going to change the study. I'm going to edit studies, and I'm going to change it from daily pivots. I'm going to change that. I'm going to go over here and I'm going to change it to monthly. I'm going to hit OK. I'm going to say, what is the monthly pivots? Oh, well, check that out. Occidental Petroleum is trading at or near its monthly predicted pivot. So I'm going to go over here and I'm going to change the right expressions from 0 to, let's go, 5, and hit enter, apply. Okay, so why would I do that? Because right now it is actually targeting for next month a technical bearish outlook. It's got a lower red and a lower green. What this is doing is making the assumption that the high for the month is already in, the low for the month's in, and if we close here, it's giving us a bearish bias. But the funny thing is, if I start to get a daily buy signal, and even though this was a bearish bias, we still had a shot because we saw an increase in volume. And if I find out that there's other names in this space, if I find out that there are other names in the space are starting to see an accumulation with higher volume and PPS buy signals, I can make an assumption at least I've got a target of taking a profit out of the market. Anyway, so first off, you got to know about seasonal analysis. You got to understand that. Next, you got to understand certain volume and what their patterns are telling us. And I think that'll give you a better shot. When we trade stock indices, and this looks like something from like maybe Woodstock days, but it's multicolored. But what you're looking at is, many of you have seen this before, what this is the 5 top stock indices. We've got the S&P, the Qs, the Russell, the New York Stock Exchange Composite Index, and the Dow. And what we have is a breakdown of each respected individual advanced decline on a daily, which is on the top, and most importantly, the weekly on the bottom. I've got monthly pivots on the top, and I got quarterly pivots on the bottom. And what this kind of shares with me, it gives me information, where's price in relationship to its longer term target, A. Where's price with its accumulation or breadth analysis? And is there money coming in or out of any one of these sectors? So it really does help us if you have a little understanding that the Russell is small cap growth stocks. The Dow is simply blue chip high dividend yielding stuff. You've got the Qs, which is what? Some technology, some biotech, and some retail like Starbucks, Tractor Supply, Costco. And those are some very large cap names. And then again, one of the biggest retailers, I guess you could say, even with its split, Apple. So the Qs really have some interesting components behind it. And then you've got the S&P 500, which I find more reliable in this day and age as a pure US-based company index, because the New York Stock Exchange Composite Index over here, that many of you probably look at the tick of the TRIN. If you do look at breadth analysis on McClellan Oscillator, for example, it's based on the NYSE. The problem with the NYSE? Only 68% of the companies are US-based companies. 50% of the companies are interest rate sensitive, including real estate investment trusts, and that's something we covered when we were out at the Money Show, and many of you were like, wow, I had no clue. So what's the point? The point is we have special indicators to help us guide us through this maze of what's been going on in the market. And we have specific tools that can help us with both timing and money flow. Now, this market's been fairly advanced, and it's been a trader's market. Many of you know that. I'm not making this up. This has been a trader's market. And I think when you get to doing and finding all these kind of trades in there and looking for the opportunities, and that's a lot of trading going on in our room. And mostly we do a lot of stocks. I can tell you this, it's because good traders anticipate the needs and the trends of the marketplace. They act swiftly, they know how to act, and they know what they're looking for. In other words, I have a great setup, it's bullish, it should happen within X period of time. I'm going to therefore put a leveraged position on an option and be directional. Real simple. You're a student of the marketplace. You should know what the NYSE contains. If you don't, then you're not a student of the market, and you're doing the same thing over and over again expecting different results. Don't you think? I mean, we now have something to really get our interest and intellect moving, is to find out what's going on with this world. This is a whole different world we're trading in, folks. What is that world? We've got global central banks infusing liquidity. And that's never happened. I think this year alone, there have been 28 foreign central bankers, 28 acts of quantitative easing around the globe. The last was 10 days or 12 days ago, was by the Bank of Australia. That's crazy. I've never traded in that environment. I don't think anyone in this audience has ever traded in that environment, because it's never been done before. And all that's going on is we go from one big sector grind to sector grind, and we just got to be able to play the market. And I think what's been frustrating people is they want to trade and they get into a strategy, but it doesn't work for all market conditions. Well, I think you got to have that knowledge, and with that knowledge, you got that confidence to act, and you can't be afraid to be wrong. We're going to get whacked. Not every trade's a winner, and that's defined risk. And more importantly, if you know that you have a pattern or a setup that doesn't work, it's going to not work in a prescribed period of time, hit the road, Jack. That's it. And that's what we need to do. You need to act, not react to market conditions. It's the guys who chase the rally. Oh, wait a minute, the market, I better get in now, and then it pulls back on you. Anyway, traders that are in trouble, they hesitate, they wait, and they're not prepared. We do a lot of work around here. I put out a lot of free information on our blogs. Last week alone, we even had some really outstanding picks in the market as far as where to get in, where the stops were, and it was up to you to know how to trade that. And that's real simple stuff. We've put that out almost on a weekly basis, excuse me. It's on our website in the blog at the top of the web page under blog. Many of you probably get that. We send it out as a courtesy to our members. Last week, we did something different. We said we're only going to use these stock trades for our audience and with specific numbers, because it was a follow-up from our seminar in Las Vegas. But I'm here to share with you some good news, though. If you're interested, it is now time. I did this last year, and we had really great results from the people who said so. It's my summer mentoring, and if you're interested, we have 12 hours of instructional video course, and we're going to conduct 3 2-hours each review sessions on Saturdays. And then also, for those who would like my professional package indicators, we'll give you 30 days so that you can learn how to use this information. We're going to talk about and cover in detail stock sector analysis, my specific market breadth and volume analysis, my top-down trading approach, which is what we've done to generate all these wonderful trades that we've had this year. Ins and outs of seasonality plays. And what I mean by that is, again, technical analysis supersedes seasonality, and you got to understand that. Those are the nuances. You just can't pick up a book and say, oh, seasonally speaking, I buy that this time of year. Seasonally speaking, this peaks out this time of year. You got to kind of match some certain things and rules. But we're going to also get into option analytics and my 3 top strategies for directional trading, because I believe that we will have, and I think everyone's predicting a market crash. Of course we're going to have a correction. I mean, since 1980, there was the one in 84, 87, 92, 95 was a minor one, 97, 98, 2001, 2002, my gosh, folks, we've had so many market crashes, and we will get them. But, the funny thing is we generally get alerts, and the market kind of gives us that inside information if you know what to look for before those big kahunas come down the pike. But we also want to take a look at using the COT, which is what we call the Insider's Report, how we create our charts to our liking, and how we use the scans like I was sharing with you in Thinkorswim. Most importantly, risk management. My stops, my last conditional change, and position sizing guidelines. So we got a lot. The first session is Saturday, June 6th. If you'd like that information, it is available on our website. It is available in, and I'll post this right here for you guys. And you can whiz through this. It is special price $4.95. This is ridiculous. And if you would like, you got to offer this offer we got because class is starting. So you're going to get all of this for $4.95. And if there is those who are got commitments financially, I believe that you can actually break this down into payments, or just give us a call and we'll help you out there, okay? What I wanted to go over, because we are starting Saturday, June 6th, 2 hours is live. You go over the material, I go over the material with you, I help you with this information so that we can get down to the nitty-gritty and really get down to how to pick off specific trades. Trades like looking at what I think is most, as I gave this seminar in Las Vegas, which is the lost art of the person's pivot, which is that blue-gold relationship, and how sometimes the gold line, which I know Thinkorswim doesn't have, but there's another way to create it, which we'll talk about in this summer mentoring class, but how you can see that the market, if it's giving you this expanded change from downtrend to uptrend, that you can look for certain specific buy signals and go with the expansion of the trading range. This is the euro currency, by the way. This was this year in April. And yes, we were getting positioned for FXE calls in that play. Next, I mean, you can clearly see on an intraday, on a daily basis, that if the market pulls back to that person's pivot, the gold level, if blue is above gold and you get a setup on increasing volume, boy, you can see that where the market really gets nice little upside movements. Anyway, this is the British pound, just little things. High close doji with an increase. Some people like, and I still use stochastics. And if you know, my mentor was George Lane. He created the indicator. I worked for George for 2 years, watched him day trade. I had the luxury of having a true technician as my mentor. Of course, I worked for him, but and I got paid. But needless to say, to understand the markets, that's probably where I got this ability to look at certain markets and look at the price. And nowadays, with computerized trading, and nowadays by combining the valuable indicators that we have, and I'm not looking at a lot of different indicators out there, but boy, to generate a buy signal and say, do I trust that buy signal? what's the difference between that buy signal and that buy signal? And there's a lot. It's a big difference. It's kind of like looking at a stock. This is super value. It's kind of a super stupid, but it has a very similar component makeup. Note blue above gold. This is our monthly pivots. It says JPM. This is from this year. This is March. Nice little trade in super value. I mean, it's not a home run. It was a base hit or so, but still really nice pickups. This is another one. Many of you remember a small company called Seagate Technologies. Seagate, STX, popped up on our radars and our scanners for a nice little move to the upside. Another one, Mondelez. Now this was very special because this was like right when before the announcement with the whole Kraft thing. But again, this was back in March, and that wasn't just more than, what, 6-7 weeks ago. Beautiful high close doji, accumulation of volume near monthly person's pivots. I mean, if we can start to learn to teach people how to more effectively use this stuff and be more directional with their options, these are all buy setups. I mean, eventually we're going to get sell setups. You know that, right? So I want to get into really teaching people about the sell side of the market and what's going on as we start to maybe get into the summer months. This was a stock that I completely blew the trade. When I say blew the trade, I got out way too early. This was some small little company called Nordic American Tanker. It had good volume accumulation, had a buy signal, generated a high close doji, had everything going for it, and I got out a little early. And that's why the picture stops here. And that sucker kept going up. But boy, I'll tell you what, sideways with volume accumulation and a high close doji with my momentum indicator, that was just very powerful. By the way, these white lines on the charts, those are that last conditional change. Last conditional change. So this is kind of where we utilize the indicator LCC for trailing stops. This is ConocoPhillips. Many of you guys remember this, and you know we've traded this twice now this year. Once in January, once again in March. Nice high close doji, volume accumulation, and then great setup. So great trigger, great setup, everything going for it. I think in the next few weeks we still have some meaningful chop, and I'm not sure we're going to see an aggressive newer high once again in all of the markets, but I think we're seeing some sector rotation. The leadership, watch the financials, watch the oil, and I know the media is probably going to be talking about oil prices, you know, because today they were down. Well, the funny thing is the commitment of traders. We talked about that in today's planning and scanning, and I think we made it available for all of you guys to see, and I would take the time. It's about 28 minutes as well. Fabulous information. The commitment of traders reveals that the small speculators are actually net long by a little bit, but they're net long crude oil and probably got long in the 60 to 60-50 area. And I think that on any further weakness, maybe we get down, maybe I was overzealous thinking we're going to get into the 55.5, 56 level. It's probably 57. But anyone that is long from 60 bucks in crude oil or 60.50, I don't know many people who on a one lot can handle a $3 downside move. I mean, that's $3,000 a contract. So the point being is the sell-off in crude oil is on lighter volume. The monthly pivot still intact in holding. And I think that we see the market somewhere in the next few days, if it gets down into the 56 to 57, somewhere in there. And that's, I don't mean to be vague about that, but remember, we could see crude oil open up at 56.17 and trade in the European session, overnight session, and then be back up to 58 in a heartbeat. So it might be an untradeable low. But the point is that if it gets down there, I think that's a buying opportunity. Therefore, I'm scanning for stocks in the energy sector to see if that's going to be the leg that takes us a little bit up in the market as we rotate, and as well as looking at some of the bank stocks, even Bank America, by the way, your Wells Fargo, things of that nature. They all formed, by the way, daily low closed dojis. All the bank stocks today formed daily low closed dojis. How do I know that? Well, if I go up to Bank America, it's right there. It formed a daily low closed doji. And notice that the candle is purple and 2 candles earlier was blue. Well, that is what we classify as a doji, and this closed below, so color coordinated, it closed below that level. So I would say we've got maybe another down day or two, and we'll see how that kind of supports, as long as we maintain the integrity of last week's low and the area down in the 1640 handle, 1630. That's the support for Bank America. Let me go down one and look under W, and Wells Fargo, it should be in there. Let's double check. WFC. Uh-oh, that's the wrong symbol. I typed in WF2C, and it actually didn't generate a low closed doji. That's why it's not in there. It generated a PPS sell signal. Interesting. So let's go over to JP sell signals, which I didn't run, but that's all right. We'll do that later. In any event, I think it's kind of neat to be able to find out what's generating buy and sell signals in here to give us a heads up in the general strength and weakness of the markets. And what we created with TradeStation was just that, to help us do a couple things on the radar screen. This looks pretty ugly. This is all the sector ETFs. Today, everything from the XHB, as you can see, reversal, everything went into sell mode. Everything's into a sell mode. It just reversed. Now, that's a daily basis. You'll notice the weekly, everything's bullish for the most part. So we've got a short-term sell-off and a higher degree buy signal. So what I am looking for is to see if this downside action in the market is in light volume, and if so, I'm looking for the market to reverse and go back in a daily buy with the weekly in a buy mode. And if we start to see, and this is the key, if I start to see certain sectors start flopping back into daily PPS buy mode in the next day or two, my guess is it'll come in the XOP and the OIH area, and then again look for the financials. Now, I'm going to go and spend 1 extra minute here, and I told you I wanted to be done in an hour because I know you guys got things to do. But let me scroll down, and we go through almost everything was red today. This was, this is blood red here. It looks uglier, I think, than it really is. But needless to say, let's take a gander. I keep going down. Consumer staples is what I wanted to show you, is coming up right here. Utilities, one more time. Healthcare, biotech, here we go. Transports, that's what I want. In the transportation sector, I know a lot of people have been talking about the IYT. Let me go over and look at the IYT with you real quick. Now, just so that you get a full kind of scope of things, this market, while the transportation sector, they state that, it's not confirming the big equity move. It's because it already did move. It had a huge upside. We're seeing a little correction on a larger degree scale. So for example, when I look at Delta Airlines, and many of you know that I travel, and I know that many of you travel. Delta Airlines, friends, this is a stock that had an accelerate. I think the entire airline sector, you're just starting to see some profit taking. Note here that what I would like to see, and what is happening, by the way, this is very interesting, because we're at quarterly pivot support. That's the green line right there, okay? And I'll change this over to let me change this to a weekly chart so you can kind of see what I'm looking at. So this is Delta Airlines. First and foremost, when people are fearful, we got this average of highs, this shelf of resistance it broke out of. and all it's doing is coming back and testing that area of old resistance. Incidentally, this green is the quarterly person's pivot support. So with that said, I would have to say that the market at this point in time might be just instead of crashing, it's in a consolidation range, digesting this huge monthly upturn in the market. So I think that all we are seeing, just as a, when I go and someone says, well, this is affecting the market, and I go, okay, let me do my own homework. In order to figure out where the market might go, ask yourself, well, where the hell's the thing been? And now when I take a look at Delta Airlines, I go, well, gee whiz, man, that thing just exploded off the chart. What about the truckers? I mean, truckers need, that's part of the economy. You got to order something and they got to ship it and they got to deliver it to the store. And actually, if you take a look at the longer term analysis here, and I'm going to just bring this up. This is JB Hunt. Notice that, yes, while we did have a doji, yes, while we did have a long shooting star, and yes, while we are sitting here, that's more of a pause. What I would have to say is that we're still in an uptrend. The market is holding off at monthly pivot support. And, quite frankly, this market could just be in what? A consolidation digesting this move to the upside. I don't have a sell signal. I don't have a trigger, but I do have a pause. So when I look at the transports, I want to say, well, what about the rails? And so as you can see, I've got all types of markets here. Now, I think the rails, and maybe because of oil, because of shale, because of all the different things, the LA strike, et cetera, maybe they got a little bit over accelerated to the upside. After all, look at the rally that ensued. And I mean, granted, if one wanted to say the market's not in sync, wouldn't the S&Ps not have been in sync with the rails last year as they were exploding off the charts? If anything, it's maybe there's sector leadership and it's rotating and they're taking some money off the table. By the way, we're actually coming into an old area of resistance, which is near both our quarterly pivot, and you can see that line. So I'm not emphatically as bearish on the transportation sector as maybe the emails that I'm getting say, okay? So with that said, if you guys, I want to say thank you for your time. There's some things that we can definitely teach you. This is an extremely valuable trading session course that we are doing together, and I think you're going to want to be a part of what we do here. With that said, I thank you very much for your time. You can definitely check out that link, sign up. This is not something that I look at taking a whole lot of students, and it's something that we're not doing for very much longer as well. We've started and launched a hedge fund. We also have PA Stock Alerts that has done extremely well this year for our stock advisory service. So I'm getting more into the money management and out of the education field. But what I'd like to leave my mark on for people is to have quality education, the right education, so that you can do this as you wanted to do this. So with that said, everyone, check this out. Take advantage of this. This is the real deal. This is amazing information, and it's teachable, and I know you are trainable. Take it in your own hands. This is a great trade. Thank you all very much, and I'll see you hopefully at our Summer Mentoring Trading Series live event. It starts Saturday, June 6th. It's very powerful, and I know when you get through my lessons, you'll have a better understanding of what to look at from a technical perspective, number one. And number two, you'll have a better perspective of where and how to place specific option strategies for directional trading. Everyone, have a great afternoon, and I hope you had a wonderful Memorial Day. Be good. Cheers, everyone. All right, there were a couple questions. And I see Jim, is the summer course recorded? And the answer is yes. That's why we have the 3 sessions together, and they are all recorded. So if Jim is still here, Jim Rizik, if you're still here, the answer to your question is yes. Mike Trung says that's a great deal, and it is. It's not something that I don't believe is covered for most programs that cost a lot of money. Mike also says he's a little new. Will some of the basics be covered? The basics are covered in the mentoring course part of the component. That mentoring course was $689. You're getting the mentoring course online as well as our classes, and that's your price of $495. Okay? So that's the answer is yes, because if you don't understand the specific rules, then you're going to have a problem. I'm pretty clear on that, and that's why we have our mentoring classes live for 2 hours each session to go over the material so that someone says, hey, I don't really understand that, I missed a point. I go over it and force it. So you have, it's a 2-part thing. I teach it, but you got to study. It's a 2-part thing. It's like going for your Series 7. You don't walk in and take the test without doing a little effort of reading it. You know what I'm saying? It's like you got to study a little bit. I think everyone, if they studied what I'm teaching, I think it's going to see notable improvements in your trading behavior as well as the signals and setups you look for. So I definitely want to address those. Those are pretty good questions. So for the new guy out there, this is the right information for you. And that's a fact. I always found that people would say, gee, I wish I came to you first, John. I went to these other guys and it didn't work out well for me. I wish I came to you first. So that's something I get an awful lot, believe it or not. A lot, I get that. So don't be afraid that you think I'm too technical. This is the right information for you. Okay? So Jerry Bongard wants to know, is the online mentoring course available immediately? Yes, it is. Sign up now. It is available right now. We'll get you set up. We'll give us 24 hours, Jerry. Is that pretty good? V. Nathan, it's only 2 hours? No. There are 3. It's 6 hours of one-on-one live mentoring. It's about 12 hours of this course material. So that's why you take each section and then we cover it live. Take each section, we cover it live. Each section, you cover it live. All right? Absolutely. That's because I can't expect someone to take an advanced and intermediate information. But I think if you can learn, I'm pretty sure if you can point a mouse, and if you're already trading right now, you're going to find this information. You'll be up to speed pretty quickly. In fact, if you're already trading now, I can't imagine why you wouldn't be taking this information. That's a fact. So I look forward to having you here, okay? Believe me, ask around. I think I do a wonderful job helping people trade better in their lives, and especially with what we've been doing with equity options. And now I started off trading commodities 35 years ago now. 35 years ago. Where did those years go? And this is my 10th year anniversary for Candlestick and Pivot Point Trading Triggers, that book with my face on it. I mean, copies of the book have, the pages are yellow. 10 years. That information is as effective then as it is today. The only difference is commodities and trading commodities is starting to go by the wayside, I'm sorry to say, because it's being replaced with more efficient ETF and options on ETFs. I mean, that's pretty much the nuts and bolts. I mean, if it wasn't true, look at the CME. The only thing that's left on the floor are option outcry. Open outcry is a thing of the past. So there's no more ARB in the pits between the electronic E-minis and the big S&Ps. Boom, gone. They haven't had open outcry that I remember or currencies worth anything forever. Most people still, for whatever reason, trade Forex. They don't trade the futures. I don't get that, but it is what it is. But there are certain nuances. We still need the futures. They have wonderful information, the transparency of volume. You know, we get so much data and information from having the futures and that transparency. And again, knowing the difference of when to maybe utilize the ETF information and when to use the futures information. And I'm giving an example in regards to analyzing the S&P futures and using the spider data. So there's certain times, especially on rollovers, that we want to utilize because of those volume changes. So we've got something like that happening in the 30-year bond futures. We have rollover coming because guess what's up in the next couple days? The month of June. So June futures are no longer a futures contract in bonds, are they? The June futures becomes kind of like a cash market. So you got to make sure that you're rolling into September. And that rollover is kind of maybe wrecking a little bit of havoc because of the premium difference between June and September. And that's information that's actually covered in this course. So in any event, I think you will find R.G. Atkins says, is the mentoring course the same as the trading PPS combined? No, not at all. The mentoring course this is now in its second year. The PPS was a great course. I don't know if you found it great. You're more than welcome to post your comments on that course. But this is two different courses. There may be some overlap when it gets to the PPS indicator and the scanning. But we go through executions, we go through options, my option analytics. I mean, there's a lot of information there, my friend. You're welcome, Mike. All right, guys, this is exciting. I'm telling you, this is exciting. This is stuff that I think a lot of our traders, we've had new guys that have come in. Maybe we've just gotten real lucky in January, February, March, April, and last year and the year before. Maybe we've just been real lucky or we've worked hard. And, you know, in all fairness, it has been a bull market. But I think just as easily as stuff goes up, we identify those hits and stuff will come down. Believe me, I want to be a bear. It's fast money being a bear. I mean, it's fast money. But we really got to have the indicators on our side. I think it's coming as my cyclical analysis dictates. But it is something I think that we will see over the course of the next few months pan out. So, and with that said, great questions. I hope I answered those for everybody, and I look forward to seeing everyone signing up for our summer mentoring session. It's at your computers. You don't have to travel. I know a lot of people love to come in my office and do the one-on-one mentoring down here. We spend a week together, but this is great because it's on your time, but then you show up on Saturdays, 9 to 11. We record it. If you can't make it, we make arrangements. It's incredible learning environment and information. So with that said, sign up right now. Take advantage of this. This is a fabulous opportunity, guys. I mean that sincerely. Take care.